This is Nightly Business Report with Tyler Matheson and Sue Herrera.
From this day forward, it's going to be only America first. America first.
A new era. Donald Trump is sworn in as the nation's 45th president, promising to make big changes. And that could make the next few months a bit tricky for investors.
Trump bump? Which stocks should you consider buying during the administration's first 100 days? Our market monitor has some picks.
Main Street matters. Why small business owners are looking to the businessman turned president to help them expand and hire. Those stories and much more tonight on Nightly Business Report for Friday, January 20th.
Good evening, everyone, and welcome. Donald Trump became the 45th president of the United States at noon today. He spoke the 35 words that are specified in the Constitution, an oath used by every president since George Washington. And so the Trump era begins. Exactly what it portends for Americans, for business, for the world is uncertain. But it is always so when power transfers from one American president and administration to another. The time for empty talk is over, said Mr. Trump in an exhortative, occasionally bracing, but brief 16-minute inaugural address. Now, he said, arrives the hour for action. Eamon Javers covered it all for us today, from the pageantry to the protests.
After a long and bruising political season, the familiar rituals of an American inaugural framed the one thing everyone agreed on today: the peaceful transfer of power in the United States of America.
So help me God.
Congratulations, Mr. President.
President Trump spoke to an audience of billions in the United States and around the world and told them that America's approach to that world has changed.
From this day forward, it's going to be only America first.
He had a kind word for the outgoing chief executive, saying that Barack and Michelle Obama have been magnificent during the transition. But he described America under President Obama as a country of economic and social decline.
The crime and the gangs and the drugs that have stolen too many lives and robbed our country of so much unrealized potential. This American carnage stops right here and stops right now.
Ultimately, Trump is a president who campaigned on job creation, and that was the core message of his address today.
We will bring back our jobs. We will bring back our borders. We will bring back our wealth. And we will bring back our dreams.
And that peaceful transition of power did take place today. Former President Obama's helicopter, no longer known as Marine One, flew past the Capitol dome shortly before the new president began his inaugural parade. For Nightly Business Report, I'm Eamon Javers in Washington.
And late today, the Senate confirmed the first member of the Trump cabinet. Retired Marine General James Mattis will assume the title of Secretary of Defense. The vote was overwhelmingly in his favor. Almost immediately after Donald Trump was sworn in as president, the Department of Housing and Urban Development suspended its plan to cut mortgage insurance premiums for borrowers. The cut was announced just days ago by the Obama White House and was meant to help more borrowers gain access to the mortgage market. The previous administration said that FHA's reserves were healthy enough to withstand the lower revenue. But today, the new administration gave no explanation for the rollback, which had been scheduled to go into effect on January 27th.
The new administration is also committed to rolling back former President Obama's climate action plan. The updated White House website says that President Trump will eliminate these harmful and unnecessary policies, adding that lifting the restrictions in the plan will help American workers and increase wages. Obama's action plan proposed to cut carbon dioxide emissions.
While the new president attended his inaugural lunch, mask-wearing protesters clashed with police in the nation's capital while chanting anti-Trump slogans. They blocked traffic, damaged cars, and destroyed store windows. Protesters in San Francisco blocked Uber headquarters, while others linked arms across the Golden Gate Bridge. But the stock market wasn't fazed, and the blue chip Dow index snapped its losing streak. The Dow Jones Industrial Average rose 94 points to 19,827. The Nasdaq added 15, and the S&P 500 was up 7. But investors who had been watching the inaugural address closely were looking for more than a thematic populist speech. As Bob Pisani reports, they wanted to hear about tax cuts, spending, and other measures that could help earnings increase growth.
President Donald Trump delivered one of the shortest inaugural addresses in modern times, and the markets drifted lower. The problem? The speech was long on protectionist talk, but very short on specifics and what exactly his priorities would be. The president said we must protect ourselves from countries that are stealing our companies and destroying our jobs, and that protection will lead to greater prosperity and strength. But stocks have been sideways for over a month because traders have awaited more specifics on the issues that would matter most to earnings. Tax cuts and infrastructure spending, for example, and they heard precious little on those issues from President Trump. As a result, several sectors that have done well since the election, aerospace and defense, for example, and building and construction stocks, all moved sideways to lower in the afternoon because of that continuing lack of details. Now, does this mean that the Trump rally is over? Not at all, but it's certainly pausing. If the early priorities are built around repealing Obamacare and a fight over trade policy, it could be a very long winter for stock bulls. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So what can we expect from stocks and bonds during the new administration's first 100 days in office? Mark Spellman, portfolio manager at Alpine Funds, and Brian Railing, he's co-head of global fixed income strategy at Wells Fargo Investment Institute, join us now. Gentlemen, welcome. Good to have you with us. Mark, let me begin with you. Are these first 100 days a time to try and make money, or just to sort of wait and see what unfolds?
Yeah, I think we have a lot priced in already. We're pretty optimistic. So I think it's wait and see what unfolds. The devil's really going to be in the details. We conceptually know what Mr. Trump is up to. But, you know, when it comes to tax policy is very difficult, very complicated. So I think we are going to take a pause here for these 100 days. But I do think the market is going to give him the benefit of the doubt.
Brian, do you agree with that? And, you know, there is some worry in the market, apparently, that Congress may get bogged down on reforming the Affordable Care Act and not make as much progress on corporate tax cuts.
Yeah, I completely agree. And the bond market now is a wait-and-see mode, consolidation. We saw the big move. We saw it in November and December, and now we need details. Both from an investor's point of view, and even if you look at the Fed speakers, looking for more details in terms of setting monetary policy.
Brian, let me follow up with that. The bond market has been sort of topsy-turvy here in the past few days. Do you expect that to continue?
Yes, I mean, I think we're going to trade, if you think of the 10-year Treasury yield, trade between 230 and 260. So moving up 5, 10, even 15 basis points from day to day, week to week, I think that's within normal expectations here as the market tries to feel out what some of those details might be.
Mark, if you had to commit new money to this market in the first 100 days, where would you put it to work?
Companies that generate lots of free cash flow. The one thing we do know is rates are up, as Brian just mentioned. Short rates are going higher. That has to change the way an investor approaches their portfolio. The old consumer staples and utilities, I think that trade is off. I think you have to look for rising dividends that will inflation protect you going forward. And I think the companies with the biggest cash flow are going to win out in the end. They'll be able to raise the dividends and make a nice return this year. You
know, Mark, let me follow up with a thought. The Wall Street Journal today and others reporting that the Obama years were very, very kind to stock investors, second only in annualized return to the Clinton years among modern presidents. Part of that was because Mr. Obama came in when stock prices were low, an accident of timing, so to speak. What do you think is a reasonable rate of return over the next few years for equities, with equities as high as you pointed them out to be?
I think a reasonable rate of return, again, it depends on the devil in these details. If corporate tax rates are going from 36 to 20%, that's a big tailwind for companies. They'll be able to buy back stock. Dividends, earnings will be up. I do think you can get mid to single digit returns. And again, income is going to continue to be an important part of that equation.
Brian, do you want to comment on that? And also, you know, what is your expectation for economic growth? How much of the stock market's performance is going to be pegged to the 3% growth rate that the new president says he intends to achieve?
Well, if he can achieve 3% growth rates, I suspect stocks will go up and bonds will go down. Now, there's a lot of question marks between here and there, obviously, and looking for those details. At this point, I'm not sure the market, at least the bond market, definitely, I don't think, believes that a 3% growth rate is imminent by any means.
Brian, is the Fed going to be as central to our economic thinking and to our markets going forward as it was over the past 8 years?
Yeah, I think the Fed's always important. And as we move into this year, one of the big uncertainties in the bond market are exactly which direction President Trump will take the Fed. He's got a couple of opener governor seats he could appoint in the near term. And then, of course, Chair Yellen's term expires early next year, and we will see him appoint or nominate her replacement sometime this summer. So a lot of big developments coming on the Fed front to watch. And again, some of that uncertainty that we need to become more certain for the bond direction, for the bond to get bond market to get some direction here.
Gentlemen, thank you very much for helping us tonight. Mark Spellman with Alpine Funds and Brian Railing with Wells Fargo Investment Institute.
And still ahead, amid the inauguration, General Electric reported earnings, and there's one persistent problem it just can't seem to shake. The chair of the Federal Reserve characterized the labor market as operating near full strength. At an event last night at Stanford University, Janet Yellen said workers are starting to see meaningful raises for the first time since the recession.
In the coming months, I expect some further strengthening in labor market conditions as the economy continues to expand at a moderate pace, a view that is shared by most of my colleagues on the Federal Open Market Committee.
Chair Yellen also said she saw few signs of the economy overheating.
Procter & Gamble raised its sales forecast following a strong earnings report. The Dow component posted better than expected revenue, driven in part by sales in its beauty and healthcare business. The experts say the upbeat outlook is the result of its turnaround strategy that included the sale of numerous brands. P&G, which of course sells Gillette razors, Tide detergent, Pampers diapers, saw its shares rise more than 3%.
It was a different story, though, for General Electric, which matched profit expectations but saw its revenue slide. The conglomerate, which is working to transform itself into a cutting-edge digital industrial company, is still dealing with a long-running problem: its oil business. As a result, shares slumped 2%, making it the worst-performing Dow stock on the index today. Morgan Brennan has more.
General Electric is in the midst of a multi-billion-dollar reinvention, and investors would like to see more of a payoff. Weakness in oil and gas operations dragged revenue lower, though the company anticipates improvement later this year as that market stabilizes and the business is merged with Baker Hughes. On a call with analysts, CEO and Chairman Jeff Immelt reiterated guidance and called 2016 a, quote, solid year, all things considering.
GE executed well in a slow growth and volatile environment. We see optimism in the United States, and here orders grew by 23%. In addition, Europe is strengthening, and we see positive momentum. Meanwhile, the resource sector and related markets continue to have headwind.
There were also bright spots. Sales were strong in renewable energy and power generation. And while orders for equipment fell, orders for services jumped 20%, a good indicator for future earnings, as GE transforms back into more of a traditional industrial company. Analysts say today's results are a bellwether for the broader sector, and as such, could be signaling the final innings of the industrial recession.
It says we are still in a slow growth world. We are still in a slow growth state in the United States, and there needs to be some catalysts to driving new growth other than just comparing against easier numbers every year. And that's going to come from, I think the great hope is, a combination of changes in tax policy and in infrastructure investment and elsewhere. Customers are generally feeling better, but there's still uncertainty.
Uncertainty around the tax code, which could potentially include fees on imported goods, and uncertainty around health care as President Trump seeks to repeal and replace the Affordable Care Act. Just two of the policy changes that could impact GE and its peers. But on this inauguration day, much still remains to be seen. And meantime, the drop in sales also meant a drop in the stock. For Nightly Business Report, I'm Morgan Brennan.
Walgreens' proposed takeover of Rite Aid could be in trouble, and that is where we begin tonight's market focus. Reports say the Federal Trade Commission has raised antitrust concerns over the nearly $9.5 billion merger. Walgreens has previously said it would divest more than 800 stores to the retail chain Fred's as part of the deal, but it may not be enough to push the deal through. Walgreens fell 2% to $81.72. Rite Aid, though, cratered down 13% at $7.46. But without citing specifics, Bristol-Myers Squibb said it will not seek accelerated approval from the Food and Drug Administration for the company's lung cancer treatment. The news comes as Bristol-Myers rival Merck received FDA acceptance for review of its own lung cancer medication. Shares of Bristol-Myers down 11% at $49.23. Merck added more than 3.5% on the session at $62.53, the close. The railroad operator Kansas City Southern posted lower profit and unchanged revenue in the latest quarter. The company said results were impacted by weakness in its energy division. But KC Southern, which gets nearly a third of its revenue from business with Mexico, tried to reassure investors that the company was positioned well despite concerns over President Trump's rhetoric to amend or repeal NAFTA. As a result, KC Southern shares were up 4% on the day to $87.91. And AT&T is seeing strong growth in its new live TV streaming service. In a regulatory filing, the telecom giant said it saw more than 200,000 paying customers sign up for DirecTV Now in just its first month. Shares of AT&T were up 1% to $41.45.
Oilfield services company Schlumberger saw its loss narrow in its latest quarter, with the results matching street estimates. The company said weakness in foreign markets dragged down revenue, but that was still good enough to beat expectations. Schlumberger was off just a fraction to $86.49. Herbalife said the Securities and Exchange Commission has requested information regarding the company's compliance with anti-corruption laws in China. The supplement company also said a strong dollar would cause earnings for the quarter and the year to come in lower than previously expected. Herbalife was down 13 cents to 53.01. The known short seller Citron Research said airplane parts maker TransDigm might be the, quote, Valiant of the aerospace industry, end quote, adding it has a massive debt load and accused it of engaging in price gouging. Citron also noted TransDigm's largest customer is the Defense Department, potentially making it a target for the new president, who has vowed to cut government defense spending. TransDigm fell 10% to finish out the session at $226.90. And Apple is suing Qualcomm for $1 billion, alleging the chipmaker overcharged Apple for products and withheld rebates. Earlier this week, the Federal Trade Commission filed a lawsuit against Qualcomm for anti-competitive patent licensing activities. Qualcomm fell nearly 2.5% to $62.88. Apple was up a fraction to $120 even.
Now to our market monitor, who has a list of stocks he says you may want to consider buying in these first 100 days of Mr. Trump's presidency. This is his first time joining us on the program. He's Bob Phillips, managing principal of the wealth management firm Spectrum Management Group. It's the first time for you, first day for the new president. How do you think it's going to go the first 100 days or so in the markets?
Well, I think it's going to be positive. If nothing else, Trump is certainly pro-business, and that's going to be a big change from the last 8 years. So there should be good things ahead.
Let's move on to a couple of your stock picks, and some of them are in areas that a lot of people think are already beginning to benefit from the new administration. Let's begin with Valero Energy, the big refiner.
Sure, Tyler, you think about it, and the three expected big changes are regulatory relief, infrastructure spend, and tax relief. Infrastructure spend and tax relief take time, but regulatory relief can happen quickly. And you got all the refiners in the country are required to buy renewable energy credits, and the price of those have doubled in the last year. So if you get some relief there, a company like Valero could actually have a major increase in earnings. And it's already trading at a pretty low multiple and pays a 3.8% dividend roughly. I think it's got great potential in the first 100 days.
All right, next on the list is U.S. Bank Corp, an interest rate play?
Exactly, plus regulatory relief. So the banks rallied very strong, obviously, after the election, and they've been pulling back since the first of the year. But I don't think the interest rate move is finished yet. We don't expect rates to jump tremendously, but they will be rising incrementally, and any kind of incremental move upward is great for the banks. And U.S. Bank is very well run. Came out a couple days ago with earnings release that was positive, so we think they've got great potential there as well.
And your third and final choice is United Continental, the airline company.
Exactly, and United Continental has got a few headwinds, but they've changed management that's focusing on getting their cost structure in line with major competitors like Delta, and there's a lot that can be done there. But predominantly, the airlines have great leverage in terms of what falls to the bottom line, and capacity is being constrained. So we think United has good potential to increase pricing incrementally. And if we have regulatory relief in the energy field, they're also going to benefit from oil prices staying low or possibly going lower.
And they certainly have no sort of dearth of ways to charge you fees in the airline business these days.
That's right.
Which is really part of their operating leverage. Bob Phillips, thanks very much. Good luck to you, Spectrum Management
Thank
Group.
you.
Coming up from Washington to Main Street, what small business owners want from their new president.
And here's a look at what to watch for next week. A fifth of the S&P 500 and about 40% of the Dow Industrials report their earnings next week, including companies like McDonald's, 3M, Johnson & Johnson, and Caterpillar. The housing market will be in focus with the release of both existing and new home sales. HHS nominee Tom Price faces the Senate Finance Committee following this week's hearing, which turned contentious. And that's what to watch for next week.
Well, small business optimism has surged since Donald Trump was elected president, and many are upbeat that the new administration will follow through on promises to roll back regulations. Others, though, a bit nervous, as Kate Rogers found out when she traveled to Detroit.
She knows how to set up.
Joe Spencer has seen economic booms and busts in his hometown of Detroit, owning his restaurant Louisiana Creole Gumbo since 1983. In the last year, things have picked up in a big way.
Last year we had our best year for a single unit restaurant. We had $1.2 million sales.
He's expanded to a second location and plans to open 2 food trucks. But one thing is on his mind these days.
So what we got going on here?
How Donald Trump stands to impact the economy.
He is supposed to be business friendly and his policies should be business friendly. So we just got to wait and see what that is. I feel as long as the auto business is doing well, that we will do well and Detroit will do well. And that's my chief concern.
Business owners have varying opinions across Motor City, which has seen a resurgence in small business growth post-recession. In recent years, over $3 billion has been invested in Detroit's downtown, where more than 100 small businesses have since launched. Tom Agosta opened his restaurant Angelina Italian Bistro in 2008 as the recession took hold. While Trump's talk of deregulation has some on Main Street feeling optimistic, Agosta is concerned, pointing to the housing collapse as proof that less regulation isn't always a good thing.
Small businesses are the ones that bear the brunt of things that happen in Washington. When people talk deregulation, I get worried because it doesn't really help the common person. It doesn't help the common people. I mean, it helps a select few people, but it never trickles down.
But Detroit native Naila Ellis Brown is staying optimistic, relying on the city's grit. The college dropout launched Ellis Island Tea in 2008 after perfecting her family's recipe. Today, she retails in some 300 stores across the Midwest, including Whole Foods.
There's a spirit that the city here carries, and that is the spirit of resilience. And all entrepreneurs know that it is an extremely tough journey, and there are times where we want to give up. And so we need a motivation to keep pushing in those tough times. I'm not in business just for myself, it's to give back to the community as well. And the way that I give back is by providing jobs. And the more my company grows, the more jobs that I can provide.
As Trump packs his cabinet with billionaires, she has just one ask.
If I had one wish over the next 4 years for the Trump administration, it would be to strengthen the economy.
For Nightly Business Report, I'm Kate Rogers in Detroit.
And that sounds like a pretty good wish for anybody, small business or not. To read more about how the Trump administration may affect small businesses, head to our website, nbr.com.
And before we go, here's another look at the markets on Inauguration Day. The Dow Jones Industrial Average rose 94 points. It finished out the session at 19,827. The Nasdaq added 15 points, and the S&P 500 was up 7.
It was a pretty stable day in the markets,
It was.
actually.
We had a little volatility early in the morning, but then it kind of straightened out.
It straightened out? It
We'll
was just
see.
fine.
Wait till Monday. You never know what's going to happen in the market. That's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
And I'm Tyler Matheson. Thanks from me as well. Have a great weekend, everybody, and we will see you back here on Monday.